Good morning, everybody. Happy Monday. It's Monday, December 7th. We're beginning a new week. Thanks, everybody, for coming. As always, my name is Yohay, Elam, a Forex Crunch and Market Movers podcast, doing the show for FX Street. As always, we'll cover the latest developments, recent developments in markets, and not only markets today, some charts and levels, the next 24 hours, and of course, your questions. If you can't see the chat box under the video, please go to the address right here, tlk.io/fxstreet-forex-live-video. Okay, so what did we have on Friday? Of course, it was Jobs Friday, and we had interesting developments over there. All in all, a good report. Yeah, so it's 211,000 jobs gained. Expectations were for 200,000, a bit better than expected. Revisions were positive with 35,000. Good news as well, especially regarding October. October saw almost 300,000 jobs gained according to the revision. Wages came out as expected, plus 0.2 month over month, plus 2.3 year over year. Lower than last month, but exactly as expected. The unemployment rate remained at 5%, but the participation rate rose to 62.5%, so that's sort of marginal improvement, another good figure. Okay, but we've seen the US dollar strengthening immediately, but it never went too far, especially not against the euro. Okay, we had lots of action regarding the euro on Friday. We had, of course, a reaction to Draghi's disappointment. So what you see mainly on the chart here is the huge rise seen on Thursday because of Draghi. Euro dollar reached 109.80. Since then, it's been establishing itself in a new range. 108.30, which is a clear separator of ranges, is now support, and resistance is at 108.95, I would say, with 109.50, and of course 110 is the level above. So we had a few ups and downs there. We had also another currency pairs such as the pound. We had it reach a resistance at 151.60, a very nice technical behavior. Since then, it's been falling below 151.15. The non-farm payrolls had a temporary positive effect on the US dollar. Why? Because a rate hike in the United States is mostly priced in. Janet Yellen said already on Wednesday that risks, that if we delay the liftoff, it's going to have risks. And she repeated the same thing in her testimony on Thursday. And the non-farm payrolls were just good enough to support this cause. Dollar yen, 123.26 at the moment. 123.20 is some kind of support. 123.60 remains high resistance. 122.20 is the critical line. In general, this morning we're seeing some kind of strengthening in the US dollar, but nothing crazy like we had last week. Dollar CAD now rising above 134. We had a few developments over there. Resistance 134.60, support 133.70 and 132.80. So in other events on Friday, we had the Canadian jobs report, disappointing. It came out at 35,000 almost minus 36, a loss of jobs. The unemployment rate rose to 7.1%. Now it's important to note that in Canada we often have swings. Okay, we have swings in the levels of employment. We have big switcheroos between part-time and full-time employment. We have really quite weird stuff over there. Anyway, this was the first big disappointment from Canada. Second was trade balance. I didn't mention it here, but it also came a bit under expectations. And then we had the OPEC meeting, okay? The members of the oil producing exporting, I never remember the initials. Anyway, as well, mostly as expected, but we got the final seal. They did not manage to agree on any production cuts. They will continue pumping oil as much as possible. The new level officially is 31.5 million barrels a day, but we already know that these guys don't really follow their own rules. And OPEC, which is third Saudi Arabia, and the rest are Arab countries, Nigeria, Venezuela, Indonesia, rejoined. But anyway, they're only a third of world production. You have Russia, the United States, Canada, Norway, so many other countries producing oil as well, and they didn't want to cut on their own. So we had lots of rumors on Friday, lots of action, but eventually the price of oil fell below $40 a barrel. It's now extending its falls. Lows so far 39, 34. We mentioned this 40 level as support. We had a real battle. Broker support is at the post-crisis low. Sorry, the low that we've seen back in August after the Chinese crisis, which was just under 38. Okay, it's 37.73 on WTI crude oil. And that, of course, has a negative impact on the Canadian dollar. That means USD CAD is on the rise. Okay, so we have these developments, quite a few things for Canada. We've seen a sort of mixed reaction because we've seen a mixed reaction for the non-farm payrolls. It was very, very messy, but now we're seeing more of a weakening of the Canadian dollar. Australian dollar is a bit different. It's doing better. We've seen it show a lot of strength over there. For example, this 72.80 line, which I mentioned so many times in last week, it worked perfectly well. So when we had the initial non-farm payrolls report released, we had Aussie dollar fall to 72.80, and the line worked perfectly well. From there, we had a rise. Also, I would see it. This line didn't work as well. That's 73.60, but I still see it as resistance. And then we've returned back to range. Further resistance is at 74. Further support 72.20. Anyway, we're seeing now strengthening of the US dollar in the new trading week. So we're seeing also this pair slide a bit, but Aussie has shown a lot of strength. Kiwi dollar also enjoyed the rise in milk prices last week. It made a move above 67 and now it's falling back down. So this re-strengthening of the US dollar is not enough to keep the Kiwi higher. But remember that beforehand it traded in a range between 65 and 66, with 65.50 sort of being also pivotal line within this range. So now we're seeing it slide back below support 67. Let's see if it's not a false break. Anyway, line I mentioned last week worked perfectly well as resistance 67.90. Okay, and dollar Swiss is rebattling the line of parity. So we've seen the Swiss franc strengthen a lot together with the euro on Thursday because of Draghi. I think also due to intervention by the Swiss National Bank. Okay, I would not be surprised. Anyway, we've seen it bounce a bit back up due to a strengthening of the US dollar. 99 is some kind of support. Parity is, of course, an important battle line. And I would say 101.50, sorry, 101.15 is the next level of resistance. But remember, there's lots of intervention here. Euro Swiss, 108.50, that's where you see how close the Swiss franc is to the euro, 108.50. And euro pound 71.80, 71.90, almost sort of sliding from the highs, finding some kind of support right here. The 72 level is not so valid anymore. I would say we have support right here at 71.80. Okay, high resistance at 72.65. Further support 71.40 and 70.40. Okay, euro pound, euro yen now, 133.75, of course rising thanks to Draghi's disappointment, and we're seeing it under 134.20, and support is at 133.15. Pound yen, a recovery of the pound, also thanks to, well, good news from the UK and the services PMI, but also sort of indirect effect of Draghi of the strengthening of the euro. We've seen it climb above 186, currently struggling with this level support at 184.30, 183.90, higher resistance 188.10. Okay, so these are the levels we've talked about. We talked about all the events on Friday, except for one important event, that's non-farm payrolls, Canadian jobs report. US trade balance was a small miss, 44 billion, not that important. OPEC unable to make decisions, and Draghi does some damage control. This is an important segment. Let's see if you have any questions before I move to talk about that, because I mentioned Draghi so many times. So good morning, everybody. I see lots of you in the room. Tillen, Nath, and already a question from Fabian. Welcome back, Fabian. Sinatra. Don't worry, you're late, Sinatra. Anyway, let's answer a few questions before we talk about Draghi. Tillen asks, if Stevens is not dovish at 10 GMT, I like pound for long for larger target. Okay, I'll answer that question. I think you mean Mark Carney, right? Because he's speaking. We'll talk about the events of the day. Today is relatively light, but I'll answer that question soon. So let's talk a bit about Draghi. Okay. You can see me well. I'm in a different office today, just for today. So Mario Draghi went to New York on Friday. The joke was that he went to New York to speak with clients of Goldman Sachs. He used to work for Goldman Sachs, explaining the disappointment because Goldman was talking about euro-dollar falling 300 pips lower. I must admit, I was also expecting a fall of the euro. Anyway, he went to this forum and he spoke there. He said that basically he tried to do some kind of damage control. He tried to explain, try to counter actually what happened in markets, the big rise of the euro, which is undesirable for the ECB because it means inflation is lower and exports are less attractive, and the fall of European stock markets, which is of course undesired for central banks. Central banks like to support the stock markets. So what we had over there is what he did say. First of all, main thing he said was that that the ECB is ready to do more, that the door is not closed, that it forecasts this fall once again. Many speculate that his hands were tied because of German opposition, and that also the forecast didn't show such a big drop in expectations. So it didn't give ammunition to Draghi and to the other doves to act. Okay, and another very interesting thing he said on Friday was that actually what the ECB did is add 680 billion euros to the system. That includes two things. First of all, the extension of QE beyond September 2016 and up to March 2017. That's 6 months, okay? And also the reinvestment of proceeds. I think we mentioned it on Friday. This thing was a bit overlooked by markets, okay? Because they did say that they will reinvest proceeds, which is what the Fed already does, so it wasn't such a big shocker, you know. But basically, for every bond that matures, the ECB will buy another bond worth the same money, okay, more or less. So in this way, they managed to maintain their own balance sheet. But he explained this, both measures are worth 680 billion euros. Now, if we do very, very simplistic math, they currently print only 60 billion euros per month, and that's a disappointment that they didn't enlarge this, okay? And if we take this and we multiply it by 6 months, 60 times 6 is 360 billion. That's what the extension of QE is worth. The rest, 680 minus 360, that's 320 billion euros. Okay? Again, very simplistic, incorrect math. I'm sure we'll have more calculations ahead, but it's still a lot of more money. And from now until March 2017, that's around 16 months. Okay, if we count also December this year, 12 months of next year, and 3 months of 2017, that's 16 months. Again, simplistic math. So we have 320 divided by 16 months. That's 20 billion euros a month because of the reinvestment of proceeds. But so that's simplistic math again. And not all of it will be now because the program is fresh. More of it will be more towards the end. Nevertheless, he wanted to send a message that the ECB actually did much more than markets expected. Now, he was asked by a colleague, former governor of the Bank of England, Mervyn King, what you're trying to do today, what you're trying to say today, is in order to mitigate the market reaction, and he began sort of saying, yeah, well, no, yeah, well, actually, yes, actually admitted that he was disappointed from the market reaction, and he did what he did on Friday to try to do actually some kind of damage control. Did he succeed? Let's look at the chart, and the answer is very, very partially. So Euro dollar on Friday did this kind of dip right here. Went all the way, fell right here down to almost to support at 108.30, and from there it bounced back up. Since then, well, it was the late hours of Friday. US traders were mostly alone. European traders already went home. Today we're seeing another resumption of this fall, but as I said earlier, we're seeing the US dollar strengthen across the board, so it's certainly not euro related. But let's see. I think it's a big question, open question. What Draghi did on Friday, will he succeed in bringing down the euro and supporting European stock markets? Or is the cat out? Has the damage been done? Remember, we've seen a jump of 460 pips trough to peak on Thursday from 105.20, which was the swing low, to 109.80. And even if we look only at a more narrow range, I mean, before the decision and after the decision, we have 105.50 to around 109. Anyway, we have 350 pips. We still have, even after all this fall of euro dollar, we still have 108.40. We still have over 300 pips from before the decision. The chart, I think, stands out. We have all the moves we've seen on Friday, which were quite nice moves for euro dollar, were nothing in comparison to Thursday. So do you think Mario Draghi can undo his damage or not? I don't have a clear answer. I think it'll take some time. So that's a big thing that happened on Friday. Let's see if you have more questions, reactions. Yeah, he still works for Goldman Sachs undercover. Yeah, you meant Carney. Carney also. Yeah, Mark Carney, that he's Canadian. He used to be the governor of the Bank of Canada, and now he's the governor of the Bank of England. He also works for Goldman Sachs. Don't we now see the breaking of the crucial 108.50 downwards in euro dollar? I see 108.30 as support, and let me show why. Let me zoom out to the daily chart. I think it'll be clearer to see that. Well, this is a bit messy. Let's look here. You see why 108.30 is my preferred line? Because it was support back in early November. And once the pair dropped below this line, it made one attempt in the middle of November to make a move back up, and it was rejected. It fell back down, and from there it continued deteriorating. So that's why I see 108.30 is much more important support than 108.50. Further support at 106.70, 107.10. Resistance, of course, 109.50, and more importantly, 110. Okay, so far the low has been 108.30. Now we talked about Carney, and we talked about events for today. So let's do that. So we'll probably have a speech by Bank of Japan's Kuroda, but there's no exact time, so I don't know. And the yen nowadays listens less to Kuroda and more to the Fed. I mean, dollar yen. Business confidence at 9:30 GMT. And why did I skip Carney here? At 3 GMT? Well, I think I have a mistake here. Sorry. Let's see the time of his speech. I might have a mistake here because you mentioned a different hour. No, the time he's going to speak at 3 GMT. So maybe that's 10 Eastern time. Yeah. He's going to speak in front of the European Parliament, which is quite a rare event. And therefore, I'm not sure in general British policymakers have too much respect for European Parliament, and the European Parliament doesn't have too much respect also for itself, I must say. They're a toothless institution. Anyway, Mark Carney can certainly move the pound by talking about the state of the British economy, inflation, things like that. I expect this to turn into a non-event, but of course I may be proven wrong. It's at 3 GMT. On the other hand, there aren't too many events today, so to hear Carney speaking sort of without any events, it might be moving. When he speaks on his own, he's more hawkish. When he speaks for the collective wisdom of the MPC, he's a bit more dovish, and that means he sends confusing messages to markets. In general, the state of the British economy is okay, especially. But last week we had the pound fall quite a lot because of weak construction PMI and weak manufacturing PMI. So I see it as generally positive, but it's still a bit mixed. I still see the Fed raising rates above. I still see the Bank of England raising rates after the Fed, but we'll have to hear more from the Bank of England this Thursday. Okay, what else do we have today? At 3 GMT, also labor market conditions from the United States, a third or fourth year indicator, not important, and consumer credit at 8. Final GDP from Japan at 10 minutes to midnight GMT. It's expected to show an upwards revision from minus 0.2 to 0.1. That will be good news for Japan, because it means Japan is not in a recession. Of course, these are very, very small figures, very small changes, but it might have more impact than Kuroda today. Okay, at midnight Australian business confidence for those of you trading the Aussie, and that's more or less everything for today. Mark Carney's speech is perhaps the biggest event, but it may turn into a non-event. In general, this week is not as busy, as exciting as last week, because last week it was sort of the all-stars week, and next week we have the Fed. Markets are still moving, as you can see. The dollar is now strengthening, so it's not a lack of events doesn't mean a lack of movements. Okay. More questions? Yeah, Fabian, it seems that last week ECB strategy to boost growth and inflation as quickly as possible lost all credibility. It's hard to see Draghi, whatever it takes, being taken seriously again in the future, included for me. But the fundamentals didn't change, and at the end of the day, the ECB is sticking with its very dovish stance. What do you think would it take to see euro-dollar back to 106 again? Great question. Regarding Mario Draghi, well, first of all, he did his best. He had quite a few balancing acts. Okay, he had two things to do. On one hand, say that the measures that the ECB did so far are working. Okay, but because we are seeing better growth, we are seeing a fall in unemployment, we are seeing more lending, which is the main transmission mechanism, and euro-dollar fell a lot, so that's also helping the economy. And even core inflation moved a bit higher from 0.6 to 0.9. So on one hand, he has to say the situation is improving. What we've done so far is working, some kind of pat on the back, okay? On the other hand, he wants to do more. So you have to find some kind of balancing. You have to do more because the situation isn't so good, but the situation is good because we did a lot so far. So this is hard to balance. Another balancing act he had to do is with the Germans and other members. We had, according to reports, 5 members vote against the action of the ECB. So he talked about the large majority, but this minority is quite vocal. It comes from the Eurozone's biggest country. Okay, so he had to find some kind of compromise. So according to a report over the weekend, he brought to the table a decision that he knew would gain enough support, and he didn't go for the full package. Okay, but yeah, he had to back down. I don't think he lost all credibility, because he earned so much credibility. He's such a master of communication. I'm still a big fan. despite this disappointment. So he didn't have his best day on Thursday, but I think that he lost just a bit of credibility. Okay. Regarding your question, what can bring euro dollar back down to 106? First of all, a bit of this damage control working, but I think it'll take time. He lost some credibility, and markets will need time to reposition. We'll need to hear more from Draghi, from Constancio, from Pratt, from all these ECB members. The second thing that can bring euro dollar down is, of course, the rate hike in the United States. I think it's mostly priced in. We'll soon show the implied probabilities, but it's still a move of historic magnitude, and I believe this will move the pair still a bit down. Okay, so I hope this answers your question. And see what you asked. Yeah, the fundamentals didn't change. Situation in the Eurozone is still not very exciting, especially inflation. We've seen core inflation. We've actually seen last week Mario Draghi vindicated on core inflation. He said the strengthening in core inflation is weakening, and that's what happened. It fell from 1.1 to 0.9. Nevertheless, he couldn't push through bigger measures. Okay, more questions I see here, which might open space at least down to 107.50. Watching my H1 Ichimoku. Yeah, I see support at 107, 107.10, but let's look at the chart again, and I think it's we're seeing an extension of the fall in pound dollar, euro dollar, also edging for the lows here at 108.40, 108.33 was the low. 107.6, you talked about 107 to Chimoko, so there is some kind of convergence with the line I marked here at 107.60, which was the high in late November, around 21st or 22nd. Okay, around the weekend there. So yeah, so there you have some kind of nice convergence. So that's the next level to watch if 108.30 collapses. Not a false break, but a real break. Okay, let's see if we have that kind of action today. We had another question here that I missed, I think. Yeah, talk about conflict of interest. Yeah. Was Karuda not during the night? Let me check that out for you. Because what I've seen is a tentative schedule. So, oh well, I don't see Kuroda. All here. Oh yeah, 1:30. Yeah, but I don't think he said. I haven't seen any headlines hitting the wire, so I can't say. I don't think he moved markets anyway, because dollar yen is quite moving alongside the dollar today, not anything else. Another question I see we had. First test euro dollar 108.30 right now. Yeah, I see it as more responsible than the extended euro bazooka. Yeah, you're welcome, Fabian. Good to have you back. Any more questions? Anyway, let's talk about more events this week. We did a preview, by the way, on Friday. Thank you, Mauricio from FX Reach for initiating these previews, so you can watch the full preview. But let's talk a bit also about this week's events. So today is a relatively lightweight day, even though, as you see, 108.32. Anyway, we have this week. Here's the Draghi disappointment. I'm keeping this slide. Anyway, this week we have. Tomorrow we have, during the night, Japanese GDP. Let's see if Japan's recession is cancelled. It's a very shallow recession anyway. Chinese trade balance. Maybe it has been moved. But anyway, have to look out for imports and also exports. US JOLTS, we have that tomorrow, so I think it's a bit less meaningful because non-farm payrolls, the NFP report was good, and Janet Yellen talked about the hikes, so this Fed favorite jobs figure is usually important, but this time not so, unless it's a total disaster, which I don't think it will be, because it's for the month of October, which was good. We have a rate decision in New Zealand. On Wednesday, they're expected to cut the interest rate from 275 to 250. What's more important, I think, is assuming we have a rate cut, is if they talk down if they complain about the recent strength of the Kiwi. Thursday we have the Australian jobs report. It's we had a superb report last time. Let's see if we can repeat this or maintain it. It'll be interesting for the Aussie dollar, which has shown a lot of strength. We have rate decision in Switzerland on Thursday morning. Now, with the ECB not doing as much as expected, there's much less pressure on the Swiss National Bank to cut the interest rates further. Rates are at 0.75, but with some exemptions in Switzerland. And we have the UK rate decision on Thursday. No changes expected. We have the meeting minutes over there. We had 8 members once again vote for a rate hike. Sorry, for no change last time, and only 1 for a rate hike. Let's see if this changes. And on Friday, we have all the focus on the US consumer, retail sales for November, for Black Friday, and consumer confidence for December, for Christmas shopping. So that could give us another, these are very important figures. So more important than JOLTS this time, well, it's always a top tier figure, retail sales, and it comes just 5 days before the all important Fed decision on December 16th. Okay, so this is what we have this week. Let's see if we have more questions. Yes, Kuroda said no need to slash rates further into negative territory. Thanks, thank you very much for helping out with that. Yeah, which is not very surprising. Kuroda needs to introduce negative deposit rate, bank increase the credit. No need to respond to small risks with monetary policy or take. Bank of Japan is clearly saying there will be no copy-paste policy following the ECB. If the ECB expanded the policy, even if the reaction suggests otherwise, that might play in favor of the yen against the euro when the euro short squeeze is over. Let us recall that quite recently markets speculated about the QE expansion in Japan, a scenario that looks more remote. Yeah, in Japan we had all the speculation until towards the October 30th meeting. We're 6 weeks ahead of this. We had no decision there. That was a disappointment, if you wish. But the Bank of Japan seems quite confident that it will reach its inflation goal even without new action, because its own inflation measures are pointing to some optimism, and well, Bank of Japan has done a lot. So yeah, and that's right, the ECB did expand its policy, just not as expected. Another question here, another comment, hedge funds, all-time highs for short gold, but supply demand still rising. Now, when the Fed takes hold, we will see whipsaw action gold. Interesting to see it play out. Well, I think gold is pressured to the downside. A Fed rate hike could add to the pressure on gold, and that's sort of what's going on over there. I think we could see maybe next year challenge of the very round 1,000 level in gold. Let's see how that pans out. Not sure it'll happen, but we're not that far from that point. So a rate hike from the Fed means more pressure on gold. But there's always real world demand for jewelry and industry. Question, what effect will a rate cut to 2.5% have on Kiwi dollar? Well, I think that's priced in. So let's say if we don't have a rate cut in New Zealand, that'll send Kiwi dollar shooting higher. A rate cut is mostly priced in. The movement in Kiwi dollar depends more on what we hear from the RBNZ, from the Reserve Bank of New Zealand, and from especially the press conference from Graham Wheeler, the governor. If they say tell us that that's the last cut for now, which is quite possible. It's of course more positive for the Kiwi, and also that's one factor. The second factor is what they say about the exchange rate. So if they say the exchange rate is about to, they complain that a recent rise in the Kiwi is undesirable. That's of course a negative for the Kiwi dollar. And if they say, of course, that they intend to cut rates even more, because that's the low level that we reached last year. From 2.5, they began raising rates up to 3.5, and from there they began cutting them back down. But if they want to cut beyond 2.5, that's already big news, and that could hit the Kiwi quite hard. Question from Fabian. Fed hike is an historical event, but at the same time, we don't know at which extent it is priced in. Yeah. So there could be a big move in the direction of a stronger US dollar, but it also could turn into a big disappointment because of big guys portfolio management at the end of the year. Also, NFP didn't cause any significant move in reaction to good data. Yeah, most of it is priced in. I promised to show you the implied probabilities. Oh, didn't put it prepared on the screen. Anyway, it's right here. Countdown to the non-farm payrolls. I hope you can see that on the screen. It's 79% for 50 basis points, which means over 100% for 37 basis points for December. There are a few questions, right, regarding the Fed. First of all, how much of this is priced in? And you're right, we've seen a weak reaction to the non-farm payrolls. They were a bit better than expected. It's also important to say that it wasn't a very huge surprise. So I wasn't expecting a huge reaction from a small surprise, but yeah, a lot of this is priced in because of what Elam said last week. And markets are already looking at 2016. How many basis points will the Fed raise rates, and how many times will we see a hike? We know that they're not going to hike rates every meeting, so we're not going to have 8 rate hikes. We're not going to have 2 additional percentage points. So every other meeting, every second meeting, every one that we have a press conference in, that means March, June, and September, and December, 4 times, 100 basis points in total, but perhaps less. What the Fed said during many months is that we're going to raise rates, but we're going to also to then work up the rates very, very, very gradually. And markets are beginning to listen right now. Okay, so that's related to your comment. What else did you mention? Yeah, there's going to be a portfolio management, but I don't think it'll happen on the week of December 16th. I don't think it'll happen next week. I think it'll happen more in this following week, around just before Christmas. Christmas is Thursday the 24th, Christmas Eve. So we have 3 full days of trading, December 21st, 22nd, and 23rd. The liquidity will be low, but I think we'll have adjustments there, and also adjustments on the following week, and on the 27th, 28th, and 29th, perhaps also on the 30th. Yeah, sorry, 28th. Yeah. Okay, and we have some. Yeah, I've seen that as well. Euro dollar falling now, 108.24. Let's see if it's a real break or not. During the Draghi mess last week, we had euro dollar falling under 105.30, under the April low, and then only to shoot back high and to higher ground. So 108.24, the low so far 108.23. Let's see if it's a real break or not. Again, Draghi did some damage control, and according to my math, very simplistic and not so correct, but he explained that reinvestment of proceeds is worth a lot of money, and the markets shouldn't overlook it. But today's move is not only euro related, it's also it's mostly dollar related. We're seeing the dollar strengthen across the board during the show. Dollar CAD is moving higher, 134.20. 134.60 is the key level. Aussie dollar is keeping a safer distance. Dollar yen. Yeah, well, we're getting closer to important levels on other pairs. In euro dollar, we fell below an important level, but let's see if it's a real break or not. Okay, let's see if there are more questions. No. Okay, so let's begin the wrap up for today. This is the wrap up for Monday, December 7th, the week after the non-farm payrolls, Yellen and Draghi, and before the Fed decision. We're seeing a lot of action in markets also today. Well, let's talk about what we had on Friday. All in all, good NFP report, 211,000 jobs gained, positive revisions, wages rising as expected, and also the participation rate rising, another small bonus. Also on Friday, we had the Canadian jobs report disappoint with the loss of nearly 36,000 jobs, a rise in the unemployment rate, also a negative trade balance, and also OPEC, the members of the cartel, were unable to make any meaningful decisions, no production cuts, weaker Canadian dollar. And the main event, or another important event for Friday that has significant echoes now, Mario Draghi, the president of the ECB, went to New York, spoke there, and talked about an open door for more action, and explained that the measures that the ECB announced are worth 680 billion euros. And according to my very simplistic calculation, it means that the reinvestment of proceeds, something that was overlooked by markets, something that also VP Constancio tried to talk about a bit later, that's worth around 20 billion a month if we spread it out. So that's what we had on Friday. It had a minimal effect on the euro, but now we're seeing perhaps a little bit more. Yeah, so 680 billion, ready to do more. And he admitted as well that he's disappointed with the market reaction. Okay, he wanted to see a weaker euro and higher European stock markets. Today on the agenda, we had Kuroda speaking. Thank you, Sinatra, for the help on that. He said that there's no need for negative deposit rates. We have later on the agenda mostly second-tier events, Syndex investor confidence in the Eurozone. Bank of England's Mark Carney speaks at 3 GMT in front of the European Parliament, perhaps the most important event for the day, but it might turn into a non-event. US labor market conditions, consumer credit, final GDP for Japan. It could be a make or break if Japan was in a recession, Q2, Q3 or not, and Australian business confidence. All in all, a relatively quiet day in terms of indicators, but certainly not in terms of market movements. Euro dollar is now slipping below 108.30. Further support 107.60, 107.10. Resistance 109.50, 110. Remember, we're seeing a stronger dollar, but also some reaction to Draghi. Pound dollar is moving lower as well, finding support at 150.60, further support at 150. Resistance at 150, 115, and 151.60. Dollar yen in the higher end of the wide range between 122.20 to 123.60. There are events in Japan, but I think that US dollar plays a bigger role here. Dollar CAD is on the rise, 134.15, resistance 134.60, support 133.70 and 132.80. Australian dollar also under pressure, but has very, very strong support at 72.80, resistance at 73.60. Kiwi dollar fell below this line, struggled to break 67, 67.90, further resistance, support 66, 65.50. Okay, so that's it for today. I'm glad we're seeing lots of action in markets, even though we don't have the huge events that we had last week. Let's see if there are more questions here. Yeah, dollar index is very strong this morning. Yeah, indeed. Euro dollar. Yeah, I think the Fed wanted markets time to adjust positions to soften the blow and raise. I certainly agree with that point. They made so many preparations, so many talks about forward guidance, First of all, they talked about considerable amount of time, then patience, and then they removed this wording until in October, in the last meeting, they said, in the next meeting, we will take these things into consideration, probably act. They gave us a hint. Okay. Question pound Kiwi. Let's look at that pair. Did we talk about this in the past or not? I'm not sure. Yeah, probably did. Anyway, currently 225. It had this kind of this kind of support I put here in the past is broken. Real support now is at 223. Okay, resistance remains very strong at 228. So this is the range in general. Both well, in New Zealand rates are about to be cut, and in the UK they're about to rise, but we're seeing an opposite move here. Now we're seeing it stable in range. Anyway, these are the lines to look at. Let's see how monetary policy evolves this week. It's both countries have rate decisions this week. Let's take a look, just a quick look at the bigger picture. Yeah, so 223 is now important support, and we've seen the pair rise quite a lot, but then change course and fall, make some kind of correction. All in all, technicals point down because we have lower highs and lower lows. Okay, another question. If you can tell, how do you evaluate if a break is good or false in your strategy, like the 1 hour and euro dollar breaking 108.30? You just wait for a close on which time frame? Use for an indicator. Well, in this case, have experience with false breaks too many times, especially in euro dollar, and in many cases breaks are just there's an initial false break followed by the real thing. So in this case, I would say if it's just 10 pips, I wouldn't see it as confirmed. Okay. Oh, sorry, that's the wrong currency pair. Why am I here and not? No. Oh, sorry. So I wouldn't call this still a break because it's not that meaningful. I would say a more significant amount of pips. I would say, yeah, staying under this kind of level for at least 4 hours, or making an immediate, more meaningful, and sort of a break with momentum. This is not what I would not yet. Of course, this can change, but at the moment, this is not what I would count. 108.20 is the low, and 108.26 is the current level. This is still not confirmed. Okay. So that's it for today. Thank you very much, everybody, for coming, and I wish everybody a safe and successful trading day. We'll be here tomorrow morning analyzing the moves. Let's see if Draghi manages to convince markets that the ECB actually is ready to do more, or is his credibility still shattered? Okay, so thank you very much, everybody, and see you tomorrow. Bye-bye.